Hey, what's up, everybody? Aaron Morgan here with the Aerosol team of Keller Williams Realty, and today I have a special guest with me, Chad Wynn of Legends Bank. How you doing today, Chad?
Doing all right, man. Trying to stay warm.
Yes, absolutely. So, Chad is a mortgage lender, and we're going to go through a quick Q&A so that if you're in the process of buying a home, you can have a little bit more information to help you make the right decision. So, Chad, starting off, tell me the different types of mortgages.
All right, so you're going to have around here, most common, you're going to have a VA loan. It's a wonderful loan because it's a 100% product. You don't have to put any money down. FHA, I would say, would be ranked right up there with that, and that's a 3.5% down loan where your credit score can be, lower than somebody's average credit score. Okay. And then you got conventional loans, which start at 3% down, 5% down, a little more common with down payments, things like that.
Okay, and there's one more. Did you mention the VA loan?
Oh yeah, the VA loan's good. Yeah, we mentioned that one first, but there's also your THDA loan, which you can have. Okay. That's going to give you $6,000 in assistance to help you with your down payment or closing costs, because you can use that for the VA loan and the FHA loan. So if you're going to use it for VA, then you might ask the seller to not pay as much closing costs, so it could have some leverage there because you're already going to be financing 100%, so you don't need it for that. Okay. So you can use it for closing costs.
Nice. Yes. Oh, that's awesome.
Then there's also rural housing. That's another 100% product. In Montgomery County, it's a little bit tricky, so you just need to always talk to your lender about what address you're looking at to make sure it's in that area, because there's some areas in the county that do not qualify. So just always remember that.
Okay.
Awesome. Check the address.
Okay. What are some of the costs associated with getting a home mortgage or applying for a mortgage?
So basically, your cost, there's usually never any upfront costs for most lenders. Sometimes you might have to pay an application fee, but generally not. Your costs are going to come when you close, and what you really want to look out for is the term like origination fee, discount fee, your underwriting fee, administration fees. Those are fees that your lender are charging. So, and a lot of times it's going to be based on what interest rate you get. So for the lower interest rate, you might pay an origination fee. You don't necessarily have to. But so those are the fees you really want to be looking at, because all the other fees are associated with third party, which is your appraisal, your title company fees, which you have to have. So your escrow that's going to be set up. So really, just pay attention to origination, discount, underwriting, processing. Those are going to be your main fees that you really want to maybe negotiate or when you're looking at lenders.
Okay. Cool. How do people get pre-approved, and how hard is that process, and what do they have to look forward to or should bring to you if they want to get pre-approved?
Yeah, pre-approval is pretty simple. Basically, you can do it over the phone with your lender. You can do it online. A lot of people like to do it online where they put their own information in. So basically, all you're needing is your name, your date of birth, social, your address, and your job and job history. That's because what that's going to do is it's going to do a couple things. It's going to be able for the lender to run your credit, to see your credit score. If that's okay, the next step is looking at your debt ratio to see how much you can qualify. So what they're looking at is what bills do you have versus to what's your income. And you want to be at a certain percent. You want to definitely be under 50% in most cases of what your gross income is versus what your bills are. And when we talk about bills, we're not talking about all your bills. We're not talking about light bill. We're not talking about cell phone. We're not talking about health insurance. Basically, it's going to be your car payment, your student loan, your credit card. Those type of bills.
The major bills.
What's going to be in your debt ratio.
Okay.
So we got to look at the credit. We got to look at your income, figure out that debt ratio, and see what you qualify for. So, but as far as the customer, it's just basically you're given a little bit of information: name, date of birth, social, job.
Okay. So what is that magic percent for debt ratio, and what is the magic number for credit score?
All right. So first, I'll start with credit score. And like every lender is different, but we start at 620. So you really want to have a 620 credit score or above. There's some other programs that want to start at 640, what we talked about earlier, the down payment assistance program, that was a 640 credit score, but we started 620.
Okay.
And then basically, as far as you said, what was this?
The magic number for your
Debt
debt to income ratio.
Yeah, so you want to be, in most cases, at 50% or less. Again, when you start talking about down payment assistance programs, they're going to cut they're going to cut that off usually around 45%.
Okay.
I know rural housing, that 100% loan density county we talked about, they're going to look at about a 41, 42, 43% range.
Okay.
In most cases.
Okay. Okay.
So, but when you're looking at VA and FHA, which that's going to be your most common loans, those can be around 50%.
Okay.
And in some cases, even higher.
Okay.
So you just, if your credit is really good and you've got some money in the bank that you're not going to be using, that's which is called reserves.
Yeah.
The more reserves you have, the higher credit score you have. We've seen those ratios go way above 50%.
Okay.
I know it's hard to believe that.
Yeah. That's a good point you made about the more reserves you have, the better you'll be.
Right.
Okay.
Yes.
Okay. Awesome. Now I want to get this right. I think I heard this earlier, but if you're using a VA loan, you don't need a down payment.
That's correct.
Okay. Awesome.
No down payment. You can also use your VA loan for a second time if you currently have a VA loan. That's something that's really helped. Your military when they've moved from station to station and they haven't sold their home.
Okay.
They can get another VA loan while they currently have one.
Okay. Now, for that second VA loan, do they have any criteria as far as staying in that house a certain amount of time, or can they rent that house out or use that VA for an investment purpose?
No, they can do all what you just said to the house they're moving out. But
Gotcha.
But the house they're moving into, it goes back to the regular
rules.
They need to occupy the home. Correct?
Okay. I wanted to make that clear.
But the VA is they're lenient on what they can do with the property they're moving out of because they know they've got
Yeah, they'll still have a mortgage coming through for that. Okay. All right. That's good to know. So as far as we talked about pre-approval, we talked about some numbers as far as credit scores and debt to income ratio. That's good information for people to know. Are there any other programs or incentives that you can think of right now that can help out a buyer, especially with the type of climate we're in as far as high interest rates and high home prices? Is there anything else that we can help the buyers out with?
We talked about THGA, which that's going to give you that $6,000 assistance, which is great. We have another program that comes out March 1st of every year. Now we have not got the guidelines yet this year. What are we, January 15th, 16th right now? So any day now we should have those guidelines.
Okay.
And that's going to be, it's called the Welcome Home Program, and it's going to give you up to in some cases, $20,000 to $25,000 assistance. So everybody's on edge. They're waiting for it to come out to be released again this year.
Okay.
So that you can start getting contracts in February.
Okay.
So they can start reviewing it in March.
Okay.
We can't turn a file in until March.
Okay.
But we can go ahead and get those houses ready so it's in line. Because this is one of those programs that it's here, but it's gone quickly. They have so much money that they reserve for different banks. Once that money is gone,
it's gone.
I mean, we have seen it last a month and a half. We've also seen it last 3 weeks. So there's no guarantee, but we can definitely get a few of those in underwriting and help some buyers out with that great program.
Yeah, so it's no need to hold off.
Right, you want
the time is now. Okay.
As soon as they give us the 2025 guidelines, we're going to be running. Okay. And hopefully, that's going to help some of those buyers out.
Okay. And last question. Now this may be a tough question to answer, but what do you see in the future? Do you see the interest rates coming down anytime soon? I mean, I know you're on top of this every day,
right?
But do you see any change in the pattern, or are we going to be in this percentage for a while?
I feel like what we're going to be, once the new president takes office next week, I feel like that's probably going to do a little bit of hindering to the rates. We have seen them come down just a tick this week. I know the feds have already talked about they're laying back as far as how many cuts they're going to have in 2025.
Okay.
So, you know, nobody has a crystal ball.
Right. Right.
I really wish I had a better answer
Yeah.
for that. But, you know, I feel like that they will drop just a little bit this year, but I don't think that they'll be in the 4% range or the high fours. But if they can dip back down to like the mid fives, or, you know, for your government loans and maybe your lower sixes for your conventional loans, I feel like that, you know, by fall that will happen. But again,
you never know.
You never know.
You know, we've both been in this business for a while. You on the mortgage side and myself on the real estate side as an agent. I like to tell my clients, if you need to buy or you want to buy, do it now. There's no need to wait.
Right.
Right.
There's no reason to wait. I mean, you can always, you know, down the road you can refinance if the rates do drop. I would say, you know, typically you would want that rate to be about 1.5% lower than what you currently took out.
Yeah, right.
Yeah, you know, but you're good. You know, your house is going to appreciate. So if you can handle the payment now, and your house appreciates, rates go down some, maybe, you know, you're able to sell that, you know, your home in a couple of years, take a little bit of that money, put it down on your next property with a lower interest rate, or refinance. So you're never really going to be in our market in Clarksville, Montgomery County. You're never really going to be stuck in your property because we have so much growth here.
Right.
I would not feel like you're going to be like stuck with that, you know, because the market is going to go down as far as property values and things like that in our area.
Okay.
Now, of course, in other areas that can be different, but here I think you are safe to buy any piece of property in Montgomery County, Clarksville, and you will walk away a year from now, 2 years from now. You will not be in what they call the hole. You will not be in the hole. You would receive something.
Okay.
From that.
Yeah.
Man. So you can't, you know, like, you know, people say don't date the rate or date the rate. Date the rate. Yeah. Right. But yeah, I mean, if it's time for you to move, don't
try and time the system. Right. Nobody's been good at that, except for I don't think nobody's been good at that timing that. The real estate market.
Not lately.
Not lately. No. Yeah. So, well, that's it, man. I appreciate everything. Chad, please let everybody know how they can reach out to you, and how you can help them and give you your service.
My office is right there at 1814 Tinytown Road, right in front of the movie theater, Legends Bank. My cell number is 931-237-3015. Call, text anytime, day or night, weekend. Thank you, guys.
All right. Thank you, Chad. Once again, I'm Aaron Morton with the Air Salt team of Keller Williams Realty, and we look forward to helping you out in the next purchase that you make in the near future. Y'all have a great one.